Hey. Thanks for being in the REC experience with Jas and Simeon. And we're going to be talking today about all the different options you have in terms of specific properties within real estate. What's up, Simos?
Good morning, my man, and good morning to our entire REC experience audience.
I had to make mention about the throwback with the old logos and
well, it is
changing
Thursday.
it up now. And
It is Thursday. It's Throwback Thursday as far as I'm concerned.
Well,
and this is all the insignia.
Yeah, I like it. But we got to get some new hats and stuff.
I think we need...
Because I know a lot of the viewers and listeners have been asking for it. They've been like, hey, where's the new swag, as the young kids call it nowadays,
listen, I like
right?
to keep it a little more corporate, if you know what I mean.
Yeah.
Let's keep it a little bit more serious. No, I can't wait for our new stuff. I know we have engaged a couple of the guys looking to get our new branding on the stuff, so we look forward to sporting it.
And actually, it's a great point. If there's any viewers or listeners that are in the business of swag and promotional materials, just reach out to us. Shoot us an email at info@reccanada.com.
We always negotiate a good bargain, so watch yourselves.
Well, I mean,
grind you.
The listeners and the viewers know that I've made mention of it thousands of times. My mom negotiates over an apple back home. You know what I mean? Like, that's just what it was.
Sorry
right?
about your luck, but we're tough negotiators.
Same thing with you guys, right? But today, it's very, very important, my man, that we're going to be speaking about all the different investment options. Because you and I, essentially, like in the last 6 months, we've been on approximately 200 Zoom calls or video calls or face-to-face meetings talking about the same stuff with our clients, right? And the question that we get, probably just right after about how's the market, the next question is, well, okay, I'm ready to invest. Where do I put my money?
Yeah.
And what type of properties? So you and I personally together have invested a lot into pre-construction condos. And we'll talk about the benefits and then things to consider with each type. We're going to talk about resale condos, so condos already on the market. We'll talk about single-family homes, well, essentially that have like two doors. We'll talk a little bit about student housing. So we're going to jump back and forth. I know you want to touch on the commercial investing, but most commonly what we're seeing in the Greater Toronto area right now is the pre-construction stuff. So let's start there, and then it's kind of neat, right, buddy, that we're gonna walk through like the initial investment of a pre-construction. So
well, I think it's important.
Why have you always liked it, man?
So, you're talking pre-construction right now?
Pre-construction condo investing.
Well, pre-construction is just a really easy route to take. And when I say easy, I don't mean it's something for beginners or something like that. Easy meaning it's not as capital intensive as other asset classes or other types of investing. You're still using the extreme power of leverage, and you're even extending the actual leverage, the 20% down that you're going to be putting, even that spread over time.
It's almost like a sub-leverage, eh? Like you're leveraging the you have the purchase price and then minus the down payment on any other type of investment. You're not, if something's priced at $500,000, you're not investing $500,000. It's 20% of that. You're investing your $100,000, obviously plus closing costs. But with pre-construction, it's so nice because you get that ability for that 20% to be laid out over 2 years, 2.5 years.
And that depends on again, like I said the word easy earlier.
Yeah. Passive, right?
And I just don't want that to be misconstrued.
Yeah.
Who you work with, and there's plenty of excellent people to work with. Our group is considered a platinum group in the city of Toronto. It doesn't matter where our audience is. Every city has an elite group of brokers that excel in this field, that is involved and have relationship with developers and builders. And
why is that important?
Why
is that important to the viewer and the listener, someone that's never heard about pre-construction?
So you know what? I'm not going to talk about Toronto.
Yeah, in general.
Let's talk about the investment class.
We
can go into Toronto the last segment, because it's important.
For sure.
But let's talk about pre-construction. So what makes a good project?
Well, also because the Raptors just won.
I mean, it's worth talking about Toronto, isn't it?
Toronto at some point.
I'm really sorry to all our U.S. audience, but not one team in the entire United States could beat our Toronto Raptors.
One team in the country?
Just one little team in Canada. I just couldn't. Don't hate us. Don't put any comments below, please. I'm
gonna bring you back. Investment class.
The investment class of pre-construction. Your base. So let's start right from the top. Mm-hmm. Pre-construction. You're buying an asset off a floor plan. The things that you need to know are the location of where it's being built. What are the area influences? Is there employers? Is there transit? Is there healthcare? Is there neighborhood amenities that you value? What you value and what I value are two different things.
And to add to that, though, Simos, because we're talking to majority of investors, is what the tenant
profile
value, right? And so
and
very important.
And that's just it. So I mean, if you're, and there is no wrong answer. Like, you can invest in a low income area, you can invest in a middle class area, you can invest in a high end area. The only thing that's different is price. The fundamentals of real estate never change. In a low income neighborhood, people need housing, people have needs, their kids go to school just like your kid. It doesn't matter. Whatever area you choose to invest in, it's the principles that make or break the investment. Is there a requirement for more housing? A.
Definitely.
What is the vacancy rate? What are the area influences? Is the investment that is slated to be completed in line with those things that you value as an investor?
And it's very easy to get this information. Like, Google it. You can Google vacancy rate in an area. It might not be like right bang on, but you'll get a good idea. So you don't have to overthink any of these things, right? Like, you can Google to see what amenities are going to be around, what amenities are around right now.
Correct.
Right? So I want to make sure that anyone listening, like, this is a lot of these things you can get on your own as well.
Yeah, so I think with the audience and anybody starting out or not starting out that needs to improve on, it's not a matter of having access to information. We live in 2019, where any search engine, for that matter, has so much data. The government websites, the banking website, the real estate websites. There is access to any and all data. It's just, what questions are you asking, and do you have the patience to do it right?
Right. Now, with pre-construction, I love the fact that we already spoke about the 20% being paid out. You can get flexible with your money. I mean, you and I use it as a strategy all the time because we don't have to tie up our like the ability to get financing.
Yeah, cash is king.
You don't actually need to get the mortgage until the building's built 3 years out.
So that's the biggest advantage. So the single biggest advantage is the fact that you're going to put 20% down regardless.
Right.
As an investor.
Exactly.
We're talking about, okay?
Yep.
So whether you're buying a resale property tomorrow or you're buying a pre-construction, 20% is going to go down one way or another. In an income property, you're going to put 20% down today.
Yep.
You have to qualify for a mortgage today. In a pre-construction, you're going to have to put your money down, a portion of the 20% down today, a portion of it in 6 months or in 3 months or in whatever are negotiated. But the bottom line is it's done over time.
Yep.
And the actual qualification for the mortgage, the actual I shouldn't say that. The actual closing of the mortgage is in 4 years.
I'm glad you mentioned that because the qualification is like you need to do that now.
It's still part of it.
It's still part of it, right?
Still
So it's not
part
like you just buy a bunch of pre-construction condos and
Yeah.
you don't have to worry about the financing. No, so like if you're watching
still
your
have to
own,
qualify.
if you're watching your own portfolio, when we do it for our thousands of clients, or if you have somebody else, your cousin Charlie doing it, make sure you understand that. Look, you can't just go out and buy 7 pre-construction condos because 3 years from now, they're all going to close, especially if they all close in the same year.
As a matter of fact, this is the one point that I will make, because this is a really popular investing strategy right now, because we are in an appreciated, like our local market is white hot, not red hot. It's white hot. Okay, so with such a crisis in housing, in such a shortage in housing, a lot of people are investing in pre-construction.
For sure.
The due diligence required is more important than ever. The pre-approval process is more important than ever. It's easy to get caught up. A lot of people have a couple $100,000 in the bank, and with only having to put down 20% and the average price being $500,000 or $600,000 for a unit in the core, the bottom line is it's easy to get carried away. So, to the point that we were making earlier, yes, you need to invest, get into the market. But if you're already into the market and you know what we're talking about, it's also just as important, or maybe even more important, rein it back in. This is an future strategy. Nobody controls the future. Nobody has a crystal ball.
Run away from them if they tell you that they do.
No doubt about it.
Right?
The most important is to be responsible to have a well-diversified portfolio. You should, in my opinion, you should have a pre-construction investment in your portfolio, but you do have to be the appropriate candidate. You have to have a clear plan that in the next 3, 4, 5 years, you know that you have a solid employment income. You know where your life is going.
Yep.
You don't anticipate major changes, because when it comes time to close, that 20% that you put down, if you can't close, say bye-bye.
In terms of due diligence, when you're looking at a pre-construction, make sure that Simeon mentioned all the stuff about the location, but you also want to look at the builder, make sure they have a good reputation, because we do see projects get canceled.
Let's make a point to that.
Right? Well, we see projects getting canceled for numerous amount of reasons, right?
We're living it right now.
100%.
We're living it right now.
And the due diligence on the builder is something that is like high priority.
High priority.
Then you want to look at the incentives that are being offered to you as an investor, and you want to have the assignment, the ability to lease during occupancy, and you want to cap developments. Anything I missed there? Anything else, man?
I don't think so. I mean, the ability to lease during occupancy is huge.
Yep.
The ability to assign the unit in the case that life does happen and put you in a funny position.
Yep.
You need to have the ability to move the unit,
Yep.
flip the paper.
Yep.
Basically, just assign
Yep.
your agreement to somebody else who can close on it and get you out of that hot potato situation, right?
So you mentioned about with an income property, and you can break up income properties into kind of some subcategories. The first one I think we should talk about is a resale condo, because in most urban areas, condos are the new first-time home buyer purchase, as well as what tenants like to move into, because they're close to jobs. They don't have to worry about transit. I apologize, like worry about cars, and it's very close to transit. You also made mention too, which is very important with an income property, different than a pre-construction condo. You need to qualify and close on that mortgage right now. You need to come up with the 20% down right now.
Yeah.
Well, we like income property, specifically with a resale condo. What's some of the things that you like about it?
And I'll go one step to that, because we can talk about the resale condo right now being an income property.
Yeah.
But we can also speak to the fact that many of our first-time investors,
Yeah.
the income property is actually their very first opportunity where they can sell. Let's say they bought a condo 5 years ago.
Yeah.
Okay. The condo appreciated. They sold it. They met Mrs. Right or Mr. Right, and at this point they're looking to make their next move. But they also don't want to stop investing. So the two-door income property is also what we see in literally hundreds of transactions per year.
Yep.
Is the gateway into real estate investment while enjoying a life of home ownership. So what a guy will do is they're going to buy, whether it's a semi-detached or a detached home, whether it had an income property, like an income suite below or not, they look to add that value into the property. We see are very humble and, in my opinion, the smartest investor make do with the least amount possible, being the basement or the upper floor, where they and their significant other or whatever the case may be live, while they rent out the biggest portion of the home or the better portion of the home.
Our friend Scott McGilvery, that's how he started with that. Him and his wife lived in the basement, rented out the top, and did that as many times as they possibly can. We have a friend in Saskatchewan, investor girl Britt, on a previous
That's right.
Like, check her Instagram profile out. She's living in the van right now. Like, I'm not saying you need to go that far, but sometimes to make some of your dreams come true, you got to eat the ramen noodles, right?
I am so sorry. Without sacrifice comes nothing.
Right?
Nothing.
So you mentioned the two doors. I personally really, really enjoy a resale condo investment, because like I myself, I'm not that handy, right? And so I can't really do much when things go wrong in a house, and then there's the furnace and the windows and the roof to take care of. With a condo, it's all built in kind of your condo fees, and, you're renting it out to one person, right?
You personally, let's talk about you personally. You found out this the hard way.
Yeah.
Because you've invested in detached properties, you've invested in semis, you've invested in condos, and you, after so many investments in so many years, have found out
watching other investors,
and you found out what is right for you. Like, we're busy.
Yeah,
we are.
And to have my condos kind of centralized in a like 15-kilometer, kind of 20-kilometer radius has made it easier for me. Yeah. And I generally like to keep them downtown or right off of transit lines. But I only have to deal with the one tenant. That's what I've always liked about the condo. Now, what you made mention to, brother, is very, very important, which is when you get into the homes with 2 doors, well, now you get to offset your rent, right? Even if you're not going to live in the basement.
So the offsetting the rent. So let's make sure we understand what that strategy is, because the income property, if it has 2 doors and we rent them both out, it just represents a great high cash flowing opportunity. So that is the basic of real estate investing.
And you always tell your clients the same thing as well, right, Simeon? I hear you on the phone that at the end of the day, the detach is going to, or a semi-detached is going to appreciate more than a condo would.
In 90% of cases.
Yeah.
Now, how fast that happens or when it happens is a different story. But if history is our teacher, detached homes, when you have a city that's growing so significantly with land being at a premium, anybody can say what they want. Detached, low-rise homes always appreciate more over time.
With the income property, you have to get the like a resale income property, condo or home, doesn't matter, semi-detached, detached. The one huge benefit is that the mortgage is being paid down and you're building equity, so you're getting that principal recapture from the day that you close. So that's why it's it's so common for people to wanting to get into that investment. I think you, as an investor, you just got to look at it, right? You got to look at, is that something that you want more than the ability to put a down payment on a pre-construction over time?
Well, don't forget, and again, this is my opinion.
Yeah.
When you're buying a resale existing property versus pre-construction, I just never want anybody to forget that when you're buying pre-construction, the only consideration you should really have is how confident do you feel in the future of the market you're investing in. When I buy a resale property today and I close on it today, forget the qualifying for a second, forget the leverage. If I buy a property today, tomorrow morning life happens. Tomorrow morning I see clouds forming in the real estate market. What can I do? I can sell it. I can refinance it. I can bring some partner in. I have a million different options.
But
with
I know
a pre-construction condo, I don't.
Yeah, you're tied until you can use the assignment clause, but that might not come out for another 2 years, right? The ability to assign.
All I'm saying is, on a pre-construction condo, understand that you're locked into a contract.
Such a good point.
Everything else is so magical, and especially in a burning hot market like ours, it's hard to find something to say bad about it, because we have made not a lot of money with pre-construction condos. Our clients have made a tremendous amount of money in pre-construction condos, but the risks involved are market conditions. And if you are not in a position, or you feel that you would hate your life if you did it, guess what? It's possible.
Yeah. Look, I mean, you get a resale property, you can touch, see it, and smell it before you even buy it. Pre-construction, you're buying from a blueprint, and some things can change, like even just the fact that a room can be 1 foot, 2 feet less, that can happen. It's actually built into the builder's contract that can happen. So if you're uneasy about it, we say it all the time to our clients, right? Look, if it doesn't feel right in your stomach.
If any of our audience thinks they're going to hear rainbows and unicorns on this segment, it's just not going to happen.
It's not what we do, because here's the thing. I was at a cocktail party not too long ago, and people were asking me about
fancy. Cocktail party.
A little bit, the odd time. The odd time I change the shirt and I put on a shirt and a blazer or something. It's very rare, my man. But as people were asking me about what's happening with the market and how can I flip this and flip that, like it was like
you're asking the wrong guy, bud.
And look, I was probably the boring guy then at that time, right? Which was like, guys, why not just make it easy on yourself? Buy it, hold it, and just chill out. And the only way that you kind of get hurt in any real estate market, specifically in the urban areas like Toronto, is when you sell it. Because you might sell it in a downturn because you got scared, right? I heard or saw it on...
but the guy who got scared is the same guy who bought because the taxi driver said it's a good idea to buy.
Or his barber.
So a market's in trouble. Go to Bay Street, go to Wall Street. When the cabbie gives you advice on what stock to buy, it's time to not take advice.
Right. I mean, Warren Buffett and Jeff Bezos, two very, very popular names, were having lunch together, and Jeff Bezos asks Warren Buffett, he says, why doesn't everyone just take your advice and get rich? And Warren Buffett looks at Jeff Bezos and says, because not everybody wants to wait. because everyone wants that quick buck. Like, how do I buy something, put some lipstick on it, do this and then flip it and make some money really quickly? Like, well,
They think everybody's an idiot.
yeah, well, like
You're the only smart guy in town, right?
you're the only one that's going to be able to find that opportunity,
here.
and they're not very, like, they're not in today's market. You can't really find those anyways. The one strategy that you and I know works no matter what is buying, holding, refinancing, and buying more.
Buying smart.
And tax-free.
Money in real estate is made when buying, not when selling. You buy smart. You do your due diligence up front.
Yeah.
With buy and hold strategy, people call it BRRRR. People call it BRRRR, meaning you're buying,
Holding.
repairing,
Yeah.
refinancing, and repeat. So you can put as many R's as you want.
For sure.
But that is the historical, proven, golden strategy of the ages. It is the only thing. If you ever ask me, what do I do? This is what you do. You want to talk asset classes? That's what today is all about.
Yep.
But what is the actual strategy? Sorry, bud.
I like to look at. Look, when you say what's the actual strategy, I think that's the halo.
That's right.
Right, that's the halo,
right.
and then you have all these asset classes. One that we have helped our investors make a lot of money in and make it very easy is student housing.
Sure.
Okay. When done properly, legally, and in an area
Properly.
when regulated, and it really offers the best from a cash flow perspective. You get the highest in principal recapture as well. You might have a little bit more to manage if you decide to manage it yourself, but like I mentioned, right, like the cash flow, it's a cash cow.
My man, student housing
Yeah.
is an asset class that is depression, economic downturn, recession proof.
Yeah.
Why is it recession proof? A student goes to school in times are prosperous.
Yep.
Job market's going crazy.
Yep.
What makes somebody prepare for the job market? Schooling. So they go to school. Economy takes a downturn. It's a dive. It's a disaster. What is the first thing that people need to do when the factory jobs
Yep.
just lost 3,000 people? What do these people need to do?
Go right back to school.
Go right back to school. Getting educated, self-improvement, whether it's university, college, doesn't matter what we're talking about. Student housing has been, and will be the single biggest, most recession-proof asset class and way to invest in real estate.
And the neat thing with students is that they generally only stay there from like a 3 to 4 year period, and you're able to increase the rents
To market.
right to market every time a student leaves, another student comes in, and it's like very, very easy to rent out in an area. Let's make sure that we make mention of that you got to look at the school that's feeding that type of investment class, because you want to make sure the better the school, the higher the tuition, the better class of tenant you're going to get
Can
as
we
well.
do a live example right now?
Well, for sure. I mean,
what's happening in Ontario? Has Ontario turned out right now
Yeah.
to be the leading, fastest growing tech market on North American soil?
outpacing Silicon Valley.
Yes or yes?
Yes or yes.
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 Where are the tech schools in Ontario? Kitchener, Waterloo.
Yep. I mean, look, even not that you mentioned Kitchener Waterloo, but even downtown Toronto, like that's starting to really boom. Like George Brown. I mean, I know they're not universities, but some of these colleges right now are pumping out a lot of students.
University, so Ryerson, Toronto, University of Waterloo, Laurier. Every single university I just mentioned, if you Google it today and put Laurier expansion, Waterloo expansion, Ryerson University expansion, you're going to see what the results are. You're going to find about 3 trillion hits on this campus expanding into Brantford. So Laurier just opened a brand new campus in Brantford, just west of Hamilton. What do you think is happening to that housing market?
They put in like $10 million or something into the expansion of that.
2 years ago, we were looking at properties there. So again, like I follow the news with passion because this is how we make our money.
For sure.
Me and you.
Yep.
Today.
Yep.
So if you're not ahead of the curve and following what is happening,
Yep.
so I'm telling you right now the recipe of what you should be looking for. You want to invest like me, you want to invest like you want to be buying smart,
Yep.
you buy ahead of the curve. If you think that's risky, I don't know what to tell you. Buy your penny stocks and day trade.
Now, when you say buy ahead of the curve, like the part that I want people to really understand is that sometimes you cannot buy ahead of the curve.
No.
Sometimes just throwing your hat over the fence and buying in an area that might, like, even if you buy a condo downtown Toronto, okay, it might not be ahead of the curve.
But it is.
Well, not really.
We know what's coming. 150,000 are coming next year, Jas.
Yeah. So what I mean by that what I'm really trying to say there, Simos, is that it's not because
it's already appreciated.
Exactly. So there's someone listening and watching saying, "Well, downtown Toronto, it's so expensive," but it's all relative. Like,
Okay, so don't buy in Manhattan, Jas.
But that's what I'm saying.
100 years ago, it appreciated.
It's going to get even more expensive. The vacancy rate is like, this is not going away.
0.6.
Right? This is what's happening. It's going to happen. I don't want people who's listening and watching to say, oh, we need to buy in the next best area, which they sometimes take as buying ahead of the curve. Buying ahead of the curve could just mean like, look, you know that there's 150,000 people coming into the GTA year over year for the next 10 years.
You are buying ahead of the curve.
You need 50,000 households for that 150,000 population that's coming in.
We're delivering 20 to 22,000.
I was going to say, on the best year on record, we've done 42,000. On an average, we don't do anything more than 30. And so, simple math.
Simple math.
Like, there's not enough bread at the bakery. And so, what happens? The little bread that's left, the values go up. And so, holding it long term. Multiplexes. You can go anywhere from 5 and upwards. It's popular because from a financing perspective, let's talk a little bit about that. Why we see a lot of our investors like the 5 doors and above.
Yeah. So again, like once you start getting into real estate investing, you're going to get an income property. You're going to do a pre-construction condo.
Yeah.
You're going to do the detached 2-door, whatever. You're going to get 1, 2, 3, 4 properties depending on how deep your pockets are and how well capitalized you are. But there is going to come a time, just like it came for us years ago, where like you can't, like you specifically, I will tell the whole world, you cannot buy a condo in your name tomorrow.
Right.
Why? Because you have way too many mortgages, bud.
Yeah. You're talking about me, Jas, as specific.
You specifically.
Yeah.
You have a great income. You have a long-standing career.
Yep.
So this isn't a credit issue.
Nope.
It's not like you haven't paid your phone bill.
Yep.
So everything is right, but you no longer qualify. I definitely no longer qualify.
Yeah, but now we get here, and we're going to come back to the multiplexes, but even you and I together, because we do a lot of our purchases together, because we're in the business together, we spend a lot of time together, we had to get creative, right? We had to get creative. We had to find ways that, okay, look, put one under your wife's name now, I'll put one under my wife's name, we'll put them together. Like you have to, I do it with my brothers a lot as well.
I'm waiting for my kids to grow up.
Well,
I'm going to use and abuse their little names.
Yeah, 100%. Get them into the job market as quick as possible, just to get more real estate. Like,
did you
we're
say
joking, but
did you
we're
say
really
she's
not.
6?
Yeah.
She works hard.
Sorry, the paper route just not going to count as income. But look, you and I look outside the box all the time. Right? We talk to our team members and we say, look, maybe let's do a joint venture. We'll put up the money. If you can get the financing, well, let's work out a deal. It could be 50-50. It could be 25 and 75,
but above
whatever
and beyond
it is,
that,
right?
going back to like a 5-plex plus,
this is sometimes your only option.
This is your only option.
Right.
So you got to get into what's called commercial financing. Commercial financing doesn't take your personal ability to repay the mortgage in hand. They may look for personal guarantees just to show who you are, but the essence of the investment, the essence of the purchase and the acquisition are going to be based on the actual income and performance of the actual asset, the actual real estate.
What is the income on the actual property, not looking at Simeon and Jas as personal applications.
That's right.
Yeah.
And there's 2 different components to this. So I can give a live example. I'm about to list, like literally in the next 2 days, an 8-plex in downtown Toronto. The said asset is located in the core. The said asset has been in control of my clients for about 4 years right now. The 5-year term comes up next year. Due to financing and a couple of different assets they want to sell. But let's talk about who the buyer will be, what the cap rate is. So the asset is going to be sold at a cap rate, which is the actual ROI based on a cash purchase. So let's call the asset's going to sell for $3 million. Let's keep the math clean and simple. If you were to pay out of your pocket today $3 million to buy this, you would be making in return, 3%. 3%.
On every year.
per year.
Per year.
Cap rate.
Yes.
What does that mean?
Yep.
3 times 3 is
Yep.
90,000.
Yep. So your income
Is going to be $90,000.
Yeah.
That seems excruciatingly low.
Yes.
People are looking for a 7 or a 10 cap.
Yeah.
7 or 10% capital return. In Toronto, so this is the difference between markets. So we're not going to go into crazy detail, but I'll give you an overview. Anybody who wants further information can reach out, or they can wait for the commercial segment that we're going to be doing in the next few weeks. But as far as I'm concerned, on a quick overview, when we say Toronto's an opportunity, it's not too late to invest in Toronto.
Yeah.
Toronto is trading at a 3.5, and 4 cap, meaning that is a bond market.
Right.
So Toronto is such a safe market to invest in over time, where institutional investors are buying apartment buildings with a cap of 3.5, and 4, meaning that they're more than okay to take this lowly return, because over time they know they're going to have the principal recapture. They're going to have appreciation beyond the means of anything else.
And they're always going to have the steady flow of tenants coming
Correct.
in, and they know the class of tenants, right? So
Correct.
like even that, right?
Tenant
like,
profile.
The tenant profile is just a lot better in some areas more than others. I'm not here to say it's better in Toronto than it is in Vancouver or whatever. It's just in some areas you're going to get a better tenant.
Right.
That's it.
So, and that's going back to the power of getting these.
Yep.
So, me and you cannot get a personal mortgage anymore.
Yep.
We are going to get this because the performance in the debt coverage ratio and the servicing ratio, the debt service ratio in the case of qualifying, is going to be met with whatever criteria, and that's how you purchase the asset.
I want to make sure our guys also understand that when you're going into, it's nice the fact that when you're going into a multiplex 5 doors and above, that the financing is based on the income. However, you're also going to need a higher down payment.
Of course.
You might
significantly higher.
You're looking at probably about 30%.
Sure.
You might get sometimes 25%. So on that $3 million property,
you
right?
need $1 million down.
Well, I'm saying it's a difference of, if it was a residential property, you were talking about a difference of $300,000 now, right? And so not everyone has that, and so it makes it a little bit tougher. However, a lot of people, besides from the financing perspective, it's nice to have an 8-plex, because when one unit is not rented out, the 7 kind of cover your behind, right? And so
the advantages of having multifamily are endless.
You have one roof.
You have one roof.
Right.
You have 8, like an 8-plex or a 16-plex. You have either 4, 8, 6, 16, 32. It doesn't matter. Like, you're mitigating the risk of the entire property across every single unit.
Yep.
You're mitigating every capital cost. So let's say we have to fix the foundation. If you have 2 tenants, you're splitting it between 2.
Yep.
If you have 16, you're splitting it against 16.
Yep.
So the cost per door is lower.
Yep.
When you're buying a property, so in downtown Toronto, you can buy a single family home for $3 million, or you can buy an 8-plex for $3 million. Which is a better purchase? I don't know.
Well, it depends what you're looking at, right? From an investor's perspective, it's a no-brainer. Like, it doesn't even, like, it doesn't matter. Now, some would say, you got that 8-plex for $3 million, okay? And how much do I need down for that now? $1 million, $900,000 approximately.
Yep.
Call it $1 million. Jas might say, you know what? I might just throw that right across 10 condos.
But you have to qualify for them.
I understand, but now if I want to get joint venture partners
Yes.
involved, take my liability down as well. So you can really start to like lay out a plan.
So they don't
right?
compare. I'll tell you why.
Yeah.
So the reason we did our condos first
Yeah.
and we reached our max is because if you do it across 10 condos and you have
Yep.
10 condos appreciating downtown Toronto,
Yep.
you're making astronomically more money across 10 condos
Yep.
than you will on one 8-plex. One gives you security, the
Yep.
other one gives you
Yep.
high equity returns, more management,
Yes.
more risk, because you
Slightly
have to
more.
slightly more
Yeah,
risk.
yeah.
The 8-plex, they afford 2 different things.
Yeah.
I think it's a matter of taking a look where you're at. Do your own self a favor and write down everything you have. Write down everything you want and contact someone who you feel can help you.
Yeah.
Kind of prioritize and lay out a map.
And talk to people that have done it before.
This conversation has arisen out of me and you doing personal conversations
Yep.
and personal roadmaps for our clients.
For sure.
Okay? If somebody's in Red Deer, Alberta, if somebody's in Vancouver, who do they call? Build a team of experts around you.
Yeah.
Local people who know the market inside out, who have proven to many people around them that they can do the job.
Well, let's really be real quick here in terms of the team. I mean, specifically, you want to make sure you start off, in my opinion anyways, I think the most important person on your team is the finance person, because that financing person will and could determine how quickly you can build out a portfolio and how you're going to build it out.
Right.
And then looking at a local realtor, and when I say local, I mean like go micro local.
Yeah.
Meaning if you're buying in Toronto, is it Toronto North, Toronto West, East, or South, like downtown? And then base it on that. And then from a lawyer's perspective, I've seen a lot of people make the mistake of buying from Vancouver in Toronto or vice versa by using the same lawyer. The laws, the regulations, it's different. Like, I'm not even sure off the top of my head if BC and Alberta, you can maybe speak about really Alberta really quickly in that sense, Simos. Do they even have a 10-day cooling period? Like in Ontario, when you buy something brand new with a condo, there must be some type of...
For the effects of this conversation,
Yeah.
every province has different laws and regulations.
Exactly.
In some cases, cities
Yeah.
impose bylaws that change provincial law or override provincial law. If you're investing, you need to create your power team ASAP.
Yep.
It should include a competent real estate investment focused accountant, a real estate, and depending on the asset class, a real estate lawyer who either specializes in all real estate or commercial real estate or pre-construction real estate. Get some recommendations.
For
Go
sure.
go on Facebook.
Yeah.
I need a recommendation. Hundreds of people will get back to you.
Yep.
You're a realtor. You put together a team in the market you're looking to invest.
And even from a realtor's perspective, only because that's the business that we're in, if you're looking at resale in Brampton, you might want to look at and comparing it to a pre-construction condo investment in downtown Toronto. That might be two totally different realtors.
Well, I wouldn't call you for either. You're the worst realtor in the world.
Probably. I have seen it so many times, right? Like using the same realtor, and unfortunately, I'm telling you, like an investment realtor is not the same as a realtor that can list your home and sell it.
I think we can talk about our conversation last
Right.
week. I mean, we have a significantly large team.
Yeah.
And when we speak to agents who want to join our team, the first question we ask is, what market are you in?
Yep.
We all live in Toronto.
Yeah.
What market are you in?
Or they say Greater Toronto area.
Yeah,
right?
don't tell me no GTA. Like you say that, you're not joining this
Right,
team.
right,
So
right.
I think the advantage of how we built our team,
Yep.
The advantage to our clients anyways, is the fact that it doesn't matter. So we'll talk about Joe Blow and Jane Doe, who are selling and downsizing. They live in Mississauga. They're both 60 years old, empty nesters. They're looking at selling the 4,000 square foot home in Mississauga, getting a little condo down by the water, staying in Port Credit. It doesn't matter what their goals and objectives are.
Yep.
Am I going to send Miss M that works Durham?
Yep.
No.
Yep.
I'm going to send you somebody who knows Mississauga like the back of their hand.
Well, yeah, because you need to know the local market
Influences.
and
What's happening?
who's going to be the buyer, right? And who's going to be the buyer.
So you match people. Like in our case, we have that luxury because we built it this way.
Yep.
Others may not have that. You as an investor need to be responsible for yourself and Google and take the time to read reviews, get recommendations of the appropriate parties that can help you reach your goals in your market.
As always, guys, I hope this was valuable for you. And thank you, Simeon. Next time you come, we need to make sure that we get the new swag.
Can I not just use the Throwback Thursday?
Well, no, because people who are watching and listening to this might not be on a Thursday. So it's
You prefer my bald head?
But if it's Friday, then you could go Flashback
Thumbs
Friday.
up. Thumbs up for yes. Thumbs down for no.
Thumbs down if the episode wasn't good. Make sure to leave us a review and a rating. 5's always preferable. But give us the truth. Let us know what other episodes and topics, more importantly, you would like us to discuss. Simeon, my brother, as always, love you.
My man.
And we'll catch up soon, guys.
Thank you to everyone. We look forward to seeing you soon.